Good morning, dear reviewer. Let me introduce myself. My name is Eudia Christy. My major is Management Economy Faculty at Semarang University. Today, I will explain about determinants of stock prices in mining companies from 2019 to 2023. Now, let's get into the discussion. Background of research. In Indonesia, there are certainly quite a lot of people who experience problem in starting a business. Some have a lot of money but don't have the idea to open a business, or some have an idea but can't open a company because they don't have a business, are constrained by business capital. Public awareness of investing increasing, especially in buying shares. However, few people are confused or unable to determine which stock are kind for investment and which are not. The wrong choice in buying stock will certainly be very detrimental to investors. Therefore, investors need to be more observant before buying stocks to invest. So, investors will later benefit from investing. Based on the research obtained, stock price experience up and down. Share prices are determined based on the company's fundamental condition in managing the company. Table, the table below inform that over the last 4 years, the average share price of companies registered in the mining industry has experienced fluctuation, increasing and decreasing current ratio, debt equity ratio, return on equity, and share price in line with the exciting research gap. Problem formulation. One, can the current ratio affect the stock price of mining companies for the 2019 to 2023 period? Number two, can the debt equity ratio affect the stock price of mining companies for the 2019 to 2023 period? Three, can return on equity affect the stock price of mining companies for the 2019 to 2023 period? 4. Can the current ratio affect the dividend policy in mining companies for the 2019 to 2023 period? 5. Can the debt equity ratio affect the dividend policy for mining companies for the 2019 to 2023 period? Can return on equity affect the dividend policy for mining company for the 2019 to 2023 period? Research framework and hypothesis. Hypothesis 1.1, suspected current ratio has a positive and significant effect on stock price. Hypothesis 1.2, suspected debt equity ratio has a positive and significant effect on stock price. Hypothesis 1.3, suspected return on equity has a positive and significant effect on stock price. Hypothesis 2, the subjected dividend payout ratio has a positive and significant effect in moderating the influence of the current ratio on the stock price. Hypothesis 3, the suspected dividend payout ratio has a positive and significant effect on moderating the influence of debt equity ratio on stock price. 4, suspected that the dividend payout ratio has a positive and significant effect on moderating stock return on equity on stock price. Result and discussion. The relationship in the variable has a p-value less than 0.05 or a t-statistic more than 2.001, then the relationship between the variable is significant. Likewise, vice versa, if the p-value more than 0.05 or the t-statistic more than 2.001, then the relationship between the variables is not worth attention. Population sample and method. The sample was 26 mining companies listed on the Indonesian Stock Exchange in 2019 to 2023. The research method used is qualitative. The data collection method used purposive sampling. In the converging validity table, the outer loading and AVE model are said to be ill if the outer loading value is more than zero point 0.7, which means that the indicators used are valid in measuring the construct, while an AVE value of more than zero point 0.5 means that the construct can explain an average of at least 50% of the item variance. Result and discussion, significant test result. Hypothesis 1, the current ratio to divided payout ratio is accepted. Hypothesis 2, debt equity ratio is dividend payout ratio is accepted. Hypothesis 3, return on equity to dividend payout ratio is accepted. Hypothesis 4, the current ratio to the stock price is rejected. Hypothesis 5, the debt equity ratio to the stock price is accepted. Hypothesis 6, return on equity to the stock price is rejected. Hypothesis 7, dividend payout ratio to the stock price is accepted. Next, conclusion. The research result proof. First, liquidity current ratio is a significant positive effect on stock price. Second, profitability return on equity hurt stock prices insignificantly. Third, leverage debt equity ratio has a significant absolute influence on stock price. Fourth, liquidity current ratio has a significant positive result on validity policy, dividend payout ratio. Fifth, profitability return on equity has a significant absolute result on dividend policy, dividend payout ratio. Six, leverage debt equity ratio has a significant positive result on dividend policy, dividend payout ratio. Suggestion. The research results state that return on equity does not affect stock prices. However, there is previous research which state that return on equity has a positive influence on share prices. This requires an insight studying regarding return on equity on share prices. Okay, thank you for your attention. Good morning.